Well, stocks in Asia were mostly lower today after fresh concerns over a slow in Chinese economy and renewed tensions weighed on investor sentiment. Our mainland Chinese market slipped as investors kept an eye on Beijing's ongoing trade war with Washington. The Shanghai Composite declined 0.1%. The Shenzhen Composite fell 1.114%. Meanwhile, Hong Kong's Hang Seng Index shared 0.26%. Japan's Nikkei 225, however, recovered from earlier losses to close fractionally higher at 20,664 points. South Korea's Kospi also made a turnaround to close higher by 0.28%. The ASX 200 in Australia slipped 0.53%. And in U.S. stock index futures pointed to a lower open as investors monitored global trade developments and looked ahead to earnings releases from companies like Apple. As from 3 a.m. Eastern Time, Dow futures traded 70 points, indicating a negative open of 90.22 points. S&P 500 and Nasdaq futures were also in the red. Market focus is largely attuned to global trade development after prospects for a long-awaited U.S.-China trade deal were dealt another setback. Investors will be waiting for earnings reports. 3M, Biogen, LVMH, Pfizer, Verizon, and Harley-Davidson will be reporting before the bell, while Amazon, Apple, and eBay will update after the bell. In terms of economic data, there will be consumer confidence numbers out at 10 a.m. Eastern Time, as well as fourth quarter housing vacancies. The Dallas Fed Services numbers will be out at 10:30 a.m. Eastern Time. The Federal Reserve is due to start its two-day meetings today. And back here on the African continent, Angola is planning to return to bond markets after securing an IMF deal and hopes to kick off a 3-year privatization program this year. Angola, Africa's second-largest oil producer, secured $3.7 billion of International Monetary Fund aid in December, having been pushed towards an economic crisis by the fall in crude prices since mid-2014. Its currency, the Kwanza, dropped more than 40% last year, making it the second worst performing in the world after Argentina's peso, while its debt jumped and international reserves fell to a 7-year low of $11.1 billion in December. And Zimbabwe plans to allow companies and individuals to trade dollars electronically as it looks to ease a crippling scarcity of foreign exchange that has sent the economy into meltdown. The Reserve Bank of Zimbabwe has upgraded its systems to allow for such transactions and will run testing until February 1, after which it plans to go live. The Southern African nation's cash crisis has caused shortages of everything from fuel to bread, much of which is imported. Zimbabwe scrapped its own currency a decade ago to end hyperinflation and adopted a basket of units instead, with the dollar being the most widely used. And Rwanda's cabinet has approved a 6-year extension of Central Bank Governor John Rwangwa's term. The cabinet also agreed to a 10% salary increase for teachers in public schools, as well as concession between the Rwanda Development Board and Gasmet Energy Limited for the extraction of methane gas from Lake Kivu, and approved 25 applications for mineral and quarry licenses. And KCB Group, Kenya's biggest bank by assets, is looking to bolster growth by joining a wave of consolidation in the country's banking industry in the next few years. Kenya's banks are moving to consolidate in response to a 2016 cap on commercial lending rates and tougher central bank regulations, which followed the collapse of 3 banks in 2015 to 2016. The government, keen on strengthening the country's banking sector, in December welcomed merger talks between NIC Bank and Commercial Bank of Africa in 2017. Diamond Trust Bank bought Habib Kenya. KCB, which also operates in Uganda, Tanzania, Rwanda, Burundi, and South Sudan, expects regulatory approval to buy more than 25 billion shillings worth of assets from Imperial Bank, which collapsed in 2015. Right, we'll take a break, and then when we come back, we'll look at the domestic commodities market. Stay with us.